FHFA has just approved VantageScore 4.0 for use with Fannie Mae and Freddie Mac loans. And this is a significant shift in the mortgage industry that will impact your lending practices. For decades, FICO has been the standard for credit scoring and mortgage lending, with lenders using the classic FICO model from 1989. However, the recent decision by Federal Housing and Finance Agency introduces VantageScore 4.0 as an alternative. And if you haven't been keeping up with the news and the differences in these new score models, now is the time to start learning. VantageScore 4.0 isn't just a copy of FICO. It looks at the same information but assesses credit risk in different ways. It's more advanced than prior versions of both FICO and Vantage scores, meaning the way you advise your clients needs to shift too. Here are the key differences with VantageScore 4.0. The first is inclusivity. VantageScore 4.0 can score approximately 33 million more consumers than traditional models by incorporating data such as rent, utility, and telecom payments. The second is trended data. Unlike traditional models that provide a snapshot of a borrower's history based on the date that you pull the report, VantageScore 4.0 analyzes patterns of how people manage credit over time, offering a more comprehensive view of a borrower's credit behavior. This means old recommendations like paying off cards quickly that have been maxed out for some time will no longer create big score boosts instantly. Another difference is the shorter credit history requirement. It requires only 1 month of credit history compared to FICO's 6 months, enabling quicker scoring for new credit users. The combination of these changes means some of your borrowers may qualify more quickly, while others may see a lower score in this new model. There are some major differences with this model that will change the way that you advise your clients. Some advice that you're used to providing will not work with this new model, but there are also some new advantages that allow your clients to utilize new ways to positively impact their credit scores to become mortgage ready, hopefully much quicker. This change presents an opportunity for you to expand your borrower base, particularly among individuals who were previously unscorable under the traditional models. However, integrating VantageScore 4.0 into your lending practice will require updates to your underwriting processes and staff training in order to learn the nuances of the model. You'll still have to run a tri-merge report. You still need to know how to read both classic FICO and now the Vantage 4.0 model. And your borrowers, they need to start building or rebuilding their credit the right way for the biggest impact to each algorithm. This isn't just a scoring model update. It's a shift in how we evaluate risk, expand access, and approve borrowers who've been stuck on the sidelines for far too long. But there is a catch. Most lenders aren't even trained yet on Vantage 4.0. They don't know what's weighted differently, what the red flags to watch out for are, or how this could change who qualifies. If you're a mortgage lender or a loan officer, now's the time to get ahead of the curve before your competition does. If you do want to know how to prep your borrowers for both models and not lose deals just because FICO says no, we work with lenders like you every day to make this transition smoother. Reach out to us. We'll show you how Vantage 4.0 can work for your pipeline and not against us. If you want to schedule a class for your company, email us at support@incitestrategiesllc.com, or you can DM us or visit our website to schedule a team session. We'll teach your team what it means, how to explain it to clients, and how to start closing more loans because of it.